of our trading for the week, and lessons learned, and basically, like, when you have, how over trading can ruin a good trading day, right? So we're going to talk about how more trades doesn't mean more money. Okay, so I'm just going to do a quick video check, sound check, make sure that you can see me and hear my screen, and I'm going to actually put the chat box up. Jay says loud and clear. Thanks a lot, Jay. Nice to have you on board today. And at the end, if you stay to the end, we have a trading checklist available for you to download, and that'll help you guide you in the process of how we actually approach the week ahead. Okay, and so we're gonna get started in just a couple of minutes here, and wait for some more people to come in. It's 12:01. Coffee hours of Greg starts now. Okay, so approaching the week, the story which I've shared with my students and with my subscribers is the silver trade. And there's many. I posted some really good articles in our school group. If you look in that school group, you can see that we've posted a number of articles. Being a broker, working for one of the world's largest forex broker dealers in the world, for about 10 years, gives me access to information, databases, and people who normally you would not have, the average retail person will not have contact with. And one of those people kind of like gave me a call and said, Greg, you want to take a look at silver? We've got some big banks that are in trouble. So we went ahead and looked at I looked at the silver trade and saw the different things we talked about here. In fact, let me go ahead and share my screen, and what we're going to do today is I will show you how I built the trade idea. Okay, like as a currency strategist at the firm, I was responsible for researching trading ideas. Every Monday, I had to come up with an idea based on, I was assigned a currency. I was assigned the euro, and so the other traders and other people in the room would want to hear what I had to say about the euro. Some people got the Canadian dollar, and some people got to do research on the Japanese yen or the British pound. I was assigned the hardest currency because the euro is the euro is just not one country; it's multiple countries. It's like the United States of Europe. So while my friend, good buddy Walker England, and Walker, if you're tuned in, big howdy do to you over in Texas. He was assigned the Swiss franc. So it was basically kind of a joke because what do Swiss, they make watches and chocolate, right? So he would talk about chocolate production and watches and tie into some Swiss National Bank interest rate decision, and that was that. Then it was my turn, and I was new on the floor, and I had to research Germany, and I had to research France and Italy and Ireland. I had to, and also England was part of the, not a a signing member, but they were associate member. So I had to look at the entire European continent. And I didn't have any more time than anybody else. I had to really summarize the top points there, right? So I had to come up with but bottom line, I had to come up with an idea, right? A fundamental idea that actually supports the technical and have a technical picture behind that idea as well. Okay. And many traders make the mistake of they're so technically focused that they totally miss what's going on fundamentally. And the fundamentals are like the backdrop of a Broadway play, right? You have the jungle or maybe a waterfall or maybe a beach, and it sets the tone of the play, right? The background. So though I don't trade fundamentals, okay, per se, I use the fundamentals as a way of developing a trading idea, right? Whether it's if you've watched the movie that was the it just slipped my mind. Does that fast? The Big Short. The Big Short. The idea was the housing crisis, mortgage-backed securities, and he took a short position because of this overall fundamental idea that the housing market is overpriced and the housing market could crash. Okay. And so he kept trading and putting in fact, he had to hold it through a lot of the prices, the houses kept going up, right? So while he was shorting, he was, a lot of people were losing faith and not really trusting his analysis. But at the end, he wound up making billions of dollars because he had a foundation. His thesis was that the housing market was going to crash, and because he had capital, he had investors who stuck with him. Some of them bailed, and the ones who bailed probably are just like, they're so angry, they're mad that they didn't stick with it. But that's what happens in trading when you don't stick with an idea. And so the fundamental thesis, the idea they stuck to, and they were able to cash in on that. Now, another movie that maybe you're familiar with is the Dumb Money. Dumb Money was the story of the GameStop, the meme stocks, how the meme stocks were GameStop was a stock. I mean, they weren't doing a lot of business. Not a lot of people, they don't go to GameStop. However, the stock was in play because basically the hedge funds were using it as a piggy bank. They were shorting GameStop, at $7 and buying it back at $3, and then it rose back up to $7, and they would just buy millions of shares, short millions of shares, and then make money when it dropped. But introducing Reddit is a social media board where people post ideas and things like that. And this Reddit board, operated by a guy named Roaring Kitty, basically said that all these guys, there's so much short positions on GameStop that it's not sustainable, that any amount of buying would force these guys to liquidate their positions. Now, a short position, for those of you who don't know, is when you enter the market selling, betting on price going down. You're basically borrowing the stock at a certain price. Maybe you borrow it $10, right? You buy the stock and you borrow it maybe at $10, and you hope that the price of the stock will drop to maybe $5 or $3, where you can buy it back in the market and pay back the loan of the stock and keep a $8 profit, the difference between 10 and 2, right? So when you're short, you're a bear, you're bearish in the market. Bears claw the prices down and bulls hit the price up. So the idea is to short high, sell high, and buy back low. That's the idea of short selling. Now, what happened is, if you've got millions of shares short and no one and prices and people jump in and start buying it, well, now instead of maybe that $7 stock, it goes from 10 maybe to 20. You're at a loss. Okay, this is how bears lose. A bear stop is a buy order for a bull. So GameStop rallied all the way to $150 a share because the hedge funds had to buy those shares back higher than what they borrowed for, right? So if they borrowed at $10 and now GameStop is $100, you lost $90 per share. Okay, now that's what happened in the movie, and which is based on a real story. In fact, they shut down the Reddit room, and there was a congressional hearing during COVID, and it was a very good movie. But the bottom line is, when big guys they don't know everything. People talk about the retail trader, and the retail trader is dumb, and even a blind squirrel can find a nut, and a broke clock will be right 2 times a day, right? And retail traders in this case were actually right. And institutions do they do dumb things. And when they do make mistakes, they're catastrophic. They're huge. They're not like, oops, I lost $1 million, or oops, I lost $2 million. These are like multi-billion-dollar mistakes, right? So bringing it to 2020. Periodically this happens, whether it's real estate, whether it's savings and loan crisis of 1987. Every financial crisis is a result of an oops, someone did something stupid, right? And since we are humans and we're prone to being stupid, as long as they're stupid, there's going to be money to be made. Okay, again, one more time. As long as there are humans, there's going to be stupid, and as long as they're stupid, there's money to be made taking the other side of the trade. Now, the new stupid right now is that we have banks, large banks, HSBC, JP Morgan Chase, Barclays, they're all short silver. They did the GameStop hedge fund thing and they borrowed silver at $30 an ounce, okay, thinking that's going to go down, right? So they're borrowing all this silver at $30. Meanwhile, if you look at the current price of silver, the current I go just share my chart. What's in my market heat map? Maybe something I can show. But the current price of silver is like $87 an ounce, right? So, and just JP Morgan alone is probably sure about 7 billion ounces of silver. They are short 7 billion, right? And you have HSBC also short maybe 5.2 billion ounces of silver, right? So you have these major banks that are short large amounts of silver, huge amounts of silver, right? And at $30, around the $30 mark, right? So for them, and so it's creating a systemic risk in the market, right? It's creating a systemic risk in the market where if you're short that much silver, it's going to disrupt the way we do business as far as the markets are interrelated. There's not just the silver markets over here, gold markets over here, stock markets over here. There's an interrelation or correlation. And so when you have this kind of this dislocation where, again, the high we had was 91.84. XAGUSD is the silver. 91.84 was the high. Low was 86.76, which is a lot higher than the $30 price that they're short. Bank of America just came out with a projection of silver going to $170 an ounce. 170. That's 100% from where we are right now, approximately, right? Close 88.77. And why? Because you're having silver is a metal that is there's not very many silver mines. So it's not like, we have the price is going higher, supply and demand. Let's go ahead and mine more silver. That's not the case. Gold, there's like gold mines. Copper, there's copper mines. Silver is produced as a byproduct from other mining. So if you're mining copper, for instance, then you'll say, we found some silver. Great, we'll sell that. I'm mining palladium. Found some silver. Okay. So silver is an afterthought. It's not the primary use of the primary goal for miners. The primary goal is not to pull silver out, which means there's going to be a constraint of supply, right? It's not going to be supply and demand. Prices go up, and all of a sudden, all the silver is going to come online, right? And a lot of silver is being used for our clean energy. Our batteries, our solar cells, solar panels require silver film. Silver is an industrial metal it's being put to work in batteries and electronics. So the silver supply is finite, very finite, right? And the demand is growing. Data centers, AI, automotive batteries, like EV vehicles are demanding silver. But to make this thing even more, the picture I'm painting you, if you were sitting in the brokerage room with me, and instead of covering the euro like I used to, I'm covering silver, and you're a trader sitting in the room with me, you're licking your chops. You're like saying, oh my God, I've got banks who are got to buy it back, right? They've got letters from the Swiss National Bank just notified Credit Suisse that they have to liquidate their silver position because it's posing a risk to their currency. It's posing a risk to the Swiss economy. And Credit Suisse, UBS bought Credit Suisse. I'm sorry. UBS bought Credit Suisse. Credit Suisse says, hey, yeah, we're in silver, but it's only 400 million ounces. We're good. Turns out to be like 5 billion ounces, not a rounding error, okay? And it was unhedged. So Credit Suisse, UBS didn't know that when they acquired Credit Suisse, they did not know that these guys had this short position open, right? Why was everyone shorting silver? It's amazing to me. But they have about 30 to 60 days to unwind from this position, right? Okay, so now let's put the cherry on top. The silver is not there. The silver that they had in reserve is gone. And the silver that's gone belongs to China. And China wants their silver. The silver is gone. They walked off with it. They don't know where it is. It was supposed to be held in a vault, protected. Imagine a bank with those old style safes that's locked up and there's guards, right? And there's all this protection and cameras. The silver is gone. So now HSBC is like going, where is the silver? We have to find it. And if we liquidate all of our reserves, all of our banking reserves to get this silver, we're going to be out of business, right? And the whole London silver exchange is going to go to pot. Okay, so this is the story that's this building. Okay, so you got this. So now you got the story. Shorting silver is not the trade. Long silver is. So now you have the fundamental picture, and you got this story line, right? That is not really well known. I was watching CNBC, and I just watched. They just mentioned it in passing, and the announcer goes, "Really? I remember when silver was $20. I can't believe it's going to 170." Well, see, that's the mainstream. The mainstream doesn't even know what we're talking about right now. They don't know. Okay, you're taking this for granted because I know Jay is one of my top students at Elite Chairs University, and so is and John. And that I have a crystal ball. We see all this stuff ahead of time. We have the predictive function. We can see stuff coming along. We have methods and ways. And if you want to find out about mentorship, make sure you reach out to me. Either type hi in the chat box or something and let me know. And I can tell you how you can become a wizard at this too, right? So that's from the fundamental picture. So I was kind of committed to the silver trade. I know Jay doesn't like silver because silver and gold are a slightly different animal, okay? Which I found out. You're gonna find out that it moves a lot faster than gold, and so your entries are you're gonna have to go to lower. I go to lower time frames, and I find out that silver is like wasabi, almost like when you go to a Japanese restaurant. And that little green stuff. Well, that stuff is not guacamole. Don't eat that stuff. That stuff is horseradish, and it will burn you. You take a scoop of that stuff, and it'll just open up your nasal. And that's what silver is like. You don't need to I usually open up a lot of trades. As I'm known to do. I open a lot of trades, and when you open up a lot of trades, it will. What will happen is you'll start depleting your margin, right? And the margin you need $40 of margin to control 50 ounces of silver, right? So it's and so not only that, it moves very rapidly, right? I mean, very, very fast. I mean, in fact, here's a trade where I made $44 in one minute at 300, and this is 301, $44, right? And you can lose money very fast too, right? If you hold it on too long, here is 343 to 356, right? So I took a lot of trades, and this is over a period of time, actually 15th and 16th, right? And one lesson I can glean from all these trades is over trading doesn't, if all this over trading, all this trading I did, I only came up with $535.80, right? Better than a sharp stick in the eye. And we started with $5,000 and we moved it up to 92,483. So for the week, we're up, close to 90%, right? But a lot of over trading doesn't necessarily mean that you're going to make a lot of money, specifically if the structure is not there. Okay, so we get the fundamental picture, great, but we have to look at the technical picture, because the technical picture will tell us when to get in, right? When to get in, and it's very important that when we go to our a checklist. Trying to find our checklist. Let me see what I want to do here. Remove all. Oh, you can't see. Oh, you can't see that. Okay, here we go. I'm sharing this screen. Okay, you guys can see what screen am I sharing? Am I sharing? Okay, am I sharing my screen? You guys can see it, right? Okay, I'm gonna share a chart. I'm gonna remove all the drawings and all the little indicators here, and just show you this raw price action here, right? And this is now, in the early stages of trend, you'll get some really smooth, wonderful moves, easy to trade. And I'm going to show you, I'm going to use Heikin-Ashi candles, which is something we use. And Heikin-Ashi candles are a lot different than Japanese candlesticks. Now, I won't go into the differences, but you can see that these charts are very, very clean, right? So at the beginning of the week, we're starting at I'm looking at the beginning of the week, and that was the 12th, right? And at the 12th, you can see that we had a very smooth uptrend in silver, right? We have this higher highs and higher lows. We have this stair step pattern. This is the structure that we're looking for. We want that structure. We want that structure to be in place, where we move from a period of lower highs and lower lows, right? Each one of these is a swing low. We want to structure is what we live for, right? We live for looking for that a lower high that's lower than the previous high, right? And it forms a stair step pattern, right? And you have to really train your eye to be able to see this stair step pattern. Do we have a marker in this baby? I thought we did. Okay. Right. So we have this higher highs and higher lows, right? And so we're making this stair step. When we have the stair step pattern, it's very simple. Is that we just buy the dip, right? When we know that the trend is up, we have higher highs and higher lows. We want to look at multiple time frame analysis. We want to walk it down from a monthly chart, right? We go, if we went to a monthly chart, we can see this is a very strong uptrend, but we were sideways consolidating for a long time. In fact, that TV announcer says, gold getting silver getting up to 20 was something to look at, right? But you can see that there's almost like the sideways, almost accumulation. We break from that level, and now when we start oscillating between 30 and 20, right? And then we break out. 29 was a breakout. Our old high from 2011 was 50, right? And then price considered to move higher, right? So now we understand the fundamental picture, but we also look at the technicals, and the technicals were, this story was still, JP Morgan and these other banks were short billions of dollars of silver. And now the news is being released, and now we're seeing, look, we broke the old high of March 2011, 49.91, right? And this looks very easy to do. I mean, and I know people that just bought silver coins, just buy coins, put them in a lockbox, and that's all you would do, right? If you go down to a weekly chart, again, we can see when we had periods where we had great opportunities to enter the market, in April on the breakout, especially here in November. That really marked our rally. And anytime we could have accumulated anywhere in here, and those have been great opportunities to get in the market with a tight stop and have a very big risk to reward. This is where the technicals match the fundamentals, right? Weekly chart, it's kind of big. You probably have to have a bigger stop, but moving down to the daily, we can see that it was when you get into the lower time frames, I know it can be like a roller coaster, right? But looking for these opportunities for long-term trading, because there's a price target on this for like $170 a share. We might not get there in one day, but looking for any type of a pullback could be an interesting move, right? Let's walk it down to the 4-hour, and this is where we start on the 12th night. Lots of great trades, right? Lots of great trades. It's pretty easy peasy, right? We had a little bit. There's our 12th. That starts the week, right? That's where we started. And it was very simple until you got to here, right? This is where I was experiencing a lot of chop, right? A lot of, where we weren't making higher highs and higher lows. We're making the same high, same low. We're moving into a sideways consolidation. And so it's very important to look at the bigger picture and seeing where the party basically ended on the 14th. And I had big gains on the 14th in the market. And then I started giving it back, and Jay was there. I was giving it back and trying to hedge and doing a bunch of things, and had to battle back off the low to get it back up, because we're in a sideways market, right? But then we had this precipitous drop off. And why my mistake as a trader was being myopic. So focused on the uptrend. The trend's your friend. The trend's your friend. Follow the trend, right? I'm buy, right? But hey, you know what? We got an indecision doji here, right? Right at the, really at the close of the 14th, right? And I usually try to be in the market no more than 2 hours at a time, right? And so now we've got this, precipitous drop. Now the 1900s where we start trading. That's like 7 p.m. Eastern time, and there we got that a drop from 92.40 down to 85.91, right? So that's like almost a $7 move. Huge move, right? Huge move. Big drawdown, and battled back and brought it back to life. But it was like, see, now we're moving into what, Thursday 14th on 14th, 15th, Wednesday, Thursday, and then now the trend, the higher time frame is still very strong, right? So the sell-offs are still there, but they're not dominating. We're not making new lows, right? We're holding this 86.36 area. The key is that we went from a trending market, a bullish market, to a sideways market. I'm going to drop it down to 30 minutes. I'm going to drop it down to 15, right? And to show you, this is like that. I'm going to change the color here, right? When we have the evolution of trend, where we have trend basically moving, we have this up move, right, in the market. And then we have that sideways consolidation, because usually the market will take a break, right? And where it takes a break is after you've made a ton of money and you feel so good. You feel invigorated. You start counting how much money you can make. And we all do it. I call it TUI, trading under the influence. Your mind starts secreting all kinds of hormones and endorphins and things, right? And you're feeling very positive and you want to get back in there again. And you're also, it's like highway hypnosis, right? You're just hypnotized by this market, and now we're in a sideways phase, right? And that sideways phase usually leads to some type of profit-taking decline, right? So we can see maybe, I'm not saying we're having a big decline, but after a rest, we might see a little bit bigger decline. And that's now if you lower it down to a 5 minute, because after a while I did learn my lesson and start shorting, and because we had this you're not gonna be able to see it. I'm gonna zoom in really big, right? We had this drop and we had this rally right here. We go to the 3 minute chart, right? And I'm just going to make this smaller, right? So we had this rounding top, like a very complex head and shoulders, right? Shoulder, head, shoulder. And though I was trying to short it, price kept rallying and rallying and rallying. And I think Jay was online and said, I don't think this is going to do this within our 2 hours. I'm going to have to hold it a little bit longer. But I was looking at this is making numerous highs. It's not making higher highs and higher lows. And I wish we had a pen feature, maybe. Pen, yeah, brush. Okay, maybe that'll work, right? Where we're looking for, we have this. We're looking for a stair-step pattern, right? And it doesn't. It fails, right? It makes a lower high structure. And I'm going to try a different color, maybe white, and maybe make it a little bit thicker, right? So we're looking for higher highs. This is the structure we're looking for longs. For an uptrend to continue, we have to have higher highs and higher lows. But what happened is we had a lower high and a lower low and another lower high and a higher low and a lower high. So this is a bearish formation, right? However, if you try to short this, you're constantly getting whacked, and that's what was going on. And what I was all doing was forcing, the issue, right? And because it took hours for this thing to finally break and drop, right? So I was here at 90.83 or so, and then price finally broke and then cascaded down, right? And I think I took profit at 89.36, right? So we didn't even we finally got out, and gold was doing the same thing. But you can see this rounding top that the longs would be great scalps, but I was actually looking for a retest of this low, and we finally got it. We got the retest this morning, 86.03, testing the old low, right? Lesson learned: the market can be more irrational longer than you have capital, right? I was fortunate that I had capital to stay in it, but this is a no trade zone, right? So I broke my rule, right? Because I like trading easy. I'm a trend scalper. I like finding, the easy, go from here to here, pull back, get the double bottom, go from here to here, it is this really easy stuff, right? And then, and I got caught here a little bit because I got a lower high and a lower low. But once you make that structure change, we have a high, a lower low, a lower high, and then we break that low right there. that switched short, and that was, I mean, the money was so fast. It was like you're closing out trades in minutes, right? So it's another, and this is another trend, right? Now once we made a high, made a low, made a higher high, and here's our structure change again right here, where we did not make a new high. We did not follow the pattern up, and this was a sign that this is sideways chop. Get out of the trade, Greg. You're done. You made enough, right? You're up. And I think at one time I was up like $396 before I got back into the red because I got short and the thing kept rallying, right? So very important that to look what's going on and see that, hey, you know what, if we've got a messy chart and you feel it too, it's not like, I can say technically, well, if it's not making new highs, but you can see, I'm going to remove everything and start from scratch if I can remove 40 drawings, right? As you can see the difference between, we're pattern recognition creatures, right? And we want to see, there is this, and then there is this, right? You want a little this, you want a little that. Everything like commercial with the hamsters in the Kia Soul. You want a little this, you want a little that. You don't want that, right? And so when you have something like this, you really want to do, what you want to do is don't forget about it, because what will happen is you're going to say, silver sucks, don't want to use it anymore, sideways chop. A week later, this thing will be at like 100, right? So what you want to do is place an alert or an alarm on your system. If you're using TradingView, you can right-click the chart and place an alert above the last swing high or right around the last swing high. Create an alert, right? And if it breaks that, hey, now you're back in business, right? The trend is probably taking a break right now. Martin Luther King's birthday is coming up Monday. A number of money centers are going to be closed, and then after that, we might see a rebound, a break above 93.20, right? You got that number down. You may not have a chart in front of you. Maybe you have some quotes, and you go, 92.30. Okay, I need to look at the market, right? And so we break out to a new high. This trend is going to could restart, right? The other place I would put an alert is below 86.24, just in case, right, that this is the top of the market, right? And maybe we move sideways and we move down some more, right? Which that could be a possibility as well. So having an alert above the previous high, that's why all-time highs, ATH, you might see it on different charting packages or strategy things. ATH stands for all-time high, right? All-time high is very important because, hey, that was old resistance, an old ceiling, and we could see a break, right? We could see this. We could see a break higher. We could see a move higher, right? And so we want to be alerted to that fact with an alert, right? And that tells us that we're out of the chop zone, we're out of this blah, 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 and then we're out, right? Or we break south, right? Because this is high probability, easy stuff to trade. We want to trade when it's easy, not when it's hard, right? Where this way we put the odds in our favor, right? This is structure, this is chaos. Now, given that, we have that, you want to use the checklist. You want to be able to refer to your checklist and go through these things. Like I said, there was a lot of extra time spent, trying to buy it, and then it's dropping and all this other good stuff. We came out ahead, but we could have come out ahead sooner, because I really had to stay up till like 2:00 in the morning in order to get out of this trade. And it caused me a lot and I don't like holding. So that means I held the position from 7 to 2, and which is totally something I don't do. I like being flat by 9 If I start at 7 p.m. Eastern time, I want to be out by 9. But you can see it's like, oh, Greg, look at this, and what you guys got to do is, if you see something like that starting, right, you might want to, after a big run, we usually have sideways consolidation, right? And moving to something else, right? Don't get married to a position, married to a currency. I made so much money in Japanese yen, I want to name my daughter Yenny or something like that. So Jenny, Yenny, so you don't want to be married to, and then the thing turns on you, then you're stuck with that name, right? But I was married to it because it moves fast. The metals, I haven't looked at a currency. I think I may have traded the Aussie dollar maybe a week ago, but I've been so addicted to the metals, because when you can exit a trade in minutes, it's wonderful. There's a fabulous picture of a fundamental picture that undergirds this, right? They're actually talking about a $400 price target on silver per ounce, right? And we're at what, 88, right? That's we're looking at a big profit potential, right? We're looking for what, 312, $300 rise in profit, right? And we've got time, because we gotta wait for this to break out, and we still have time in this. So there is a basically a 3x your money, right? It's pretty cool. I got my kids in it, my nieces and nephews in that, and it's pretty cool that they are the first trade they make is the winning trade, because their uncle is a currency strategist, right? But with this, you need to going back to the lessons learned is, again, my time is worth is you want your trading to fit around your life, not the other way around. So you want to set hours. You want to set business hours. Set up your trading like a business, right? You wouldn't be at your business unless you work for 7-Eleven or something. You work 24 hours, but who wants to work 24 hours? We got into trading for freedom, for being able to go around the world, to live our best life, not to basically slave in front of a screen all day, right? I was able to take my girls in a helicopter ride. We went around in Las Vegas, the place where I live, right? It was Las Vegas, which was really cool. And we were able to go out to dinner and be able to go to some shows and do some really cool things. Why? Because we had the money to do so. So, but you don't want to, like I said, you don't want to spend hours. And like I could cut the trades right there, I've been up $396, which is still about 3-4% in a day, right? I'm trying to find the checklist, professional checklist. There it is, right. Let me go through the checklist, right? So this is a professional trader institution checklist. Again, if you message me, if you email me at greg@elitetradersu.com, greg@elitetradersu.com, right? And this, put the checklist in the subject line. That's all you gotta do, right? Type the word checklist in the subject, and I'll send you this. Or you can screenshot it. That's fine too, right? So my pre-trade checklist, a couple things want to look, market context. Is it trending or ranging, right? You want to, that's very important to know. There's some people that trade the range. I'm not one of them. I like breakouts from consolidation. So you want to check that. Expansion or correction. Are we in an expansion or correction? Here, we can see that was kind of a correction, right? Clean structure or messy? Messy, right? So I broke all three of my rules, right? Learn, do as I say, not as I do, right? Bias. Am I with the trend? Am I forcing a counter trend idea? Yes. Answer. And location is priced at a meaningful area, a structure high or low, a fib zone, a liquidity area. And with back here when it was easy, hey, there's structure, there's higher highs and higher lows. There's all kinds of fib zones. I mean, you can fib zone. We're not going to talk about fib zones here, but you can take a high and a low and find a bounce from a fib, get long, and you've got entries, multiple entries with fib zones like everywhere, But here, where's the fib zone? You can't find a fib zone. If you put moving averages on here, the moving averages are going to twist, right? So you want, how can you determine if something is trending or not? You can use a moving average. You can use a 21 period moving average or a 5/8 moving average like we use in mentorship. Okay. A liquidity area, where there's liquidity area is just support or resistance, right? Like even here, if we were trading the range, a double bottom is a liquidity zone, right? Is a liquidity zone that we could tap into, if we were standing inside. Say, okay, I got a low here. What I'm going to do is wait for price to return back to the scene of the crime, right? So here's my zone. And in fact, and you can see that, and not a great example because it's in that sideways range. But if I were to take one shot trade in this, is that I'm going to draw my zone when price returns to this area, this A661 area. That's where my trade would be. I could put a buy limit at this area, and when price comes to this area, I can get long, like one shot, right? So all this is going on, this is going on, this is going on, blah 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 blah, boom, and my buy limit is triggered. My typical target is back up in here, but if I get half of the range back, I'm good, right? And so when we actually hit that, bounce back up again, right? So it actually was a great, good little entry for a $3 move, right? So that's the only way. But this is another zone here where we had, prices moving to a zone, comes back in trend, which is even better because if you have a liquidity zone in trend, well, guess what? Boom. You can make so much more, right? So finding those zones, very important. Now, setup check, do I see structure? Do structure and Fibonacci agree? We want to make sure we check that. Did price react, not just touch, right? I showed you that. When price comes to that zone, they just sit there, but did it actually rebound and with some gusto, right? Little oomph, right? And is this an A+ setup or am I bored, right? And sometimes, trading can, especially Asia session can be boring. And sometimes you might pull a trigger on something and, because, looks okay. So it's very important to really check your, are you bored? And if you're bored, you need to go for a walk. Does this match my rules? And if any of these answers are no, skip, right? And execution check, that's the next thing. Am I entering on confirmation, not hope? Okay. I was talking to my VIP students, traders yesterday. I said, I want to get off of opium. I mean, not opium, hopium. Okay. Hoping, wishing, praying is not a strategy. Hopium, right? That's a new addictive drug. I hope it's going to, I hope. No, there's no reason. There's no hope in trading, right? Is your stop at a logical place, not an emotional place? And placing stops at areas where structure fails, right? If you're making higher highs and higher lows, well, guess what? The low that you bought, well, that's your stop, right? The pattern itself should have your stop built in, right? And the moment it switches structure, well, then your stop should be get you out and possibly reverse you to get you in, right? Because basically the stop basically says you've got the structure wrong, pal, right? Or you've got the timing wrong, right? So is my risk fixed? A fixed percentage each time? And MT4 makes it a little bit more difficult. TradingView makes it a lot easier to do. But you really don't want to risk any more than 2%, 1 to 2% of your account, right? 2%. So if you're risking 2% and you're looking to make 2% more, right? That's a 1-to-1. You really want to get like 1.6 to 1, a 1.6 to 1 risk to reward, right? For every dollar you risk, you make $1.60. That keeps you in the game, especially if you're scalping. Okay, it's kind of hard to get out like a 3-to-1 or in scalping. If you have a trend though, and not a sideways consolidation, you can. And that's why it's very important to determine what type of market you're in, so you can determine how big your price targets are and how much risk to take and how much reward to expect, right? Don't expect big returns in a range. Okay, and can you accept the risk fully, right? So cutting your losses quickly may decrease your win percentage, but ultimately you want to preserve your account, right? And if you're with the trend is going to give you a lot more comfort. And you're going to find emotionally, if you're feeling fearful or hesitant, that's your gut. And it's probably you're seeing that the market's moving sideways, right? It's not giving you like, wow, this is, we call it sunrise, sunset, sunrise. You bet on the sunrise, it's always going to rise, right? When you're in a trend, it's sunrise, sunset. But a change in structure is like the earth is turned upside down and the sun doesn't rise because it's an eclipse, right? Every 18 months there's a solar eclipse. So every 18 years, or 18 months, the sun doesn't disappears, right? And that's how it is if with trend, right? We trend 20% of the time, 80% of the time we're in a range. And in that 20%, that's where we make a lot of money, right? Emotional check. Am I calm or am I tense, right? You want to check your emotions, especially if you're not feeling well. I remember I had a Charlie horse, not a Charlie horse, but actually a pulled hamstring. And a Jay saw me. I was like limping around in my car. And I was in pain, and I was taking pain, medication as well. And so my trading judgment just sucks. I'm, if I'm on any kind of medication, trading should not be part of my repertoire. That should not trade. Don't drive heavy machinery. Don't operate heavy machinery, and don't trade when you're under some type of stress or a type of illness, right? And then emotional check again. Am I watching every tick? And it's good to watch every tick if you're trading on the tick chart, right? And I'm using the higher time frame as my 5 minutes. So watching every tick, but that's not your methodology. If you're trading off of a 1 hour, 4 hour, or 30-minute and 5 minute, you should be looking at every tick. Stay on your time frame, stay in your lane, and stick with it, right? And am I moving my stops emotionally, right? Honor your stops. Very important to honor your stops. It's so easy to move them or to use a mental stop, which is like not having a stop at all. But know when you're going to get out. You're going to bail. And, you saw like in this year, I bailed on some of these, right? And they like that one. I said if they hit that 4607, I said I was going to bail, and I cut 3 positions out, and that kind of set me back. But guess what? I mean, that thing went a long way in the wrong direction, right? And I was able to flip it and go the other direction. My buys were screwed, but my sells, because it was in that choppy range. So when you see when I'm in a trending zone, I'm going to have all sells or all buys, but the mixture that you see reflects that I was in a choppy market, right? I mean, I just got hammered, trying to buy, and then it flipped back sells, and the sells came back and bailed me out, right? So again, this is, even though it was a profit and I'm up for the week, right? And we took the account from $5,000 to 92.43. It wasn't my best showing. It probably my weakest showing this week. Very embarrassing for but however, embarrassment doesn't pay the bills, right? And I was lucky this time. It could have been a lot worse. And so I have to, by talking to you guys and sharing this with you, I hope for you to not make the same mistakes that I made, and to learn from it and grow, and grow your accounts. In fact, some of my students actually were taking the other side of my trade, which I was so proud of them when they say, "Oh, well, Greg, we were short gold when you were long." I was like, "Oh, that's great," and they made money, right? Which is I'm not prideful to say, well, I'm the best person in the world. It's like, no, I have my days, right? Professionals will strike out and things will happen, right? So it will. So I'm not ashamed of that, and I'm very proud of my students that actually said, well, if he's going the wrong way, if I take the other side, I'm going to make money, right? And that's one of the things of our VIP live trading room, right? That you can you learn now, not just to be a sheep, right, and just like follow whatever Greg is doing, but you can say, well, Greg may not have it together today. Let me go ahead and take the other side, and they make money. And they didn't. I tell like, why didn't you say anything? Oh, we didn't want to. I said, don't worry about. I don't have an ego. My goal is help traders become successful. And if you took the other side of my trade and made money on it, bravo, right? At least one person is winning, right? I was the indicator. We had a guy in a room named Bill years and years ago, and another room I was part of. And Bill he could not buy a trade. He always was however, when he said, I'm going to go long euro, and we're all in another chat going, oh, he's going long, let's all go short, right? So we called him the indicator. And so we all made money, right? Because he was always wrong. He's like, oh, whatever he says, let's do the opposite, right? And then one day Bill goes, I don't think I'm going to trade anymore. I'm losing money, and I'm not that good. Oh, no, everyone, let's take up a collection for Bill. No, Bill, we need you in the room, man. You're important. You're an important player, because he was the indicator, right? It was kind of mean, but if you have someone who's 100% wrong, that is a holy grail. If you have, all you gotta do is just do the opposite, right? And so that night, I was the indicator, which is I'm human, and so let me know in the chat box if you've ever been the indicator. Okay, so emotional post-trade debrief. We're gonna wrap this thing up. Did I follow my rules? No. Was this an A, B, or B setup? More like an F setup. Was entry planned or impulsive? It was planned, but then it turned impulsive. Did I respect my stop? No. I did. I was stopped out repeatedly, actually. I was stopped out more yesterday than I've probably been stopped out ever. Will I take this trade again? No. Heck no. Not only did I miss on hours of sleep and I have bags under my eyes from fighting with that market, it's like God took me out back. Bam. Don't you ever do that again. I'm like, going, yes, Lord, I will never do this again. Right? Will I take this trade again? No. So my weekly extraction, what did I do automatically this week? Another thing, the market was moving so fast that I know my normal process of going through CNBC, going through my market heat map, going through was kind of thrown out the window because I mean we were in profit from entry. I mean, soon as we said our prayer and all of a sudden prices moving, we got in, we're making money, right? And so that happened the first day, it was great. Second day it happened. Third day it was like the trap, right? Where you're not doing your planning, you're not doing your thing, you're off your game, right? Um, so so when the market is moving, it's kind of like I don't care if you move or not. I'm going to go through my ritual. I'm going to go through my practice. I'm going to go through my time frames. I'll walk through the time frames. I'll walk through my heat map. I'm going to walk through my checklist, right, for preparation, and the market will be there, right? So I think that's so what I did automatically. I threw out my methodology out the window for price action, right? And unfortunately, it paid off, right, initially. But rewarding bad behavior is a way for disaster, right? You know, with this, like when you win your very first trade, you think you're invincible, right? Oh, this stuff is easy. I won my first trade. This is easy, and it's not, right? So what did I avoid, right? Well, I avoid following my plan. But what I did avoid was losing, right? I'm actually proud of myself that I actually took those hits, took the stops, and not allow them to go overboard, right? I did do an experiment with hedging, and we won't talk about that. That was pretty disastrous there. That was actually I did that in an account to show how what not to do. There was a video of a guy who never used stops. I'm like, well, this is what he did. And what happened was we actually had everything in place, but the spreads widened out. They don't take into account that when you do hedge positions, right, you can be perfectly hedged, but if the spread widens out, it will knock out all of your trades at once, right? So that was another lesson we learned. So where did intuition save me? Intuition basically told me that, hey, if you stick with the short was going to pay off, and the short did. And where did ego show up? It showed up by not actually following the plan, thinking that I had together, right? And after 30 years, you've got to go through your steps, right? And so what rule protected me? What rule protected me was using a stop, right? That actually has stop. Now, the master question, would I be proud to show this trade to my students? Well, I'm showing it to you as a object lesson, and I'm not proud of my performance. However, can you imagine that even my worst performance is still better than most people's best performances? Just because of this on the percentage gain, right? I'm not making excuses or glossing over, but just being fully transparent that this is we had strings of wins, but our losses are the bigger than our average winner. So, well, it's something we need to work on, right? But the bottom line is that the silver market is still the metals market in general, silver and gold, are markets. I'm gonna wrap this up right now. I'm gonna find the button to stop sharing. I hope you found this helpful. Stop. Oof. Was I sharing? Okay. Okay. Okay, good. Okay. Because the thing just went dark. Thank you, Jay. Yeah. So we have a fundamental picture. Gold, silver are very strong for the and that's what we want to do. We want to trade very strong markets that have a good foundation, a good fundamental picture. Especially when the news is just now coming about. This is like it's not on everybody's radar now. But when it does, we're going to see probably acceleration in price, you know, um, and then actually, as far as maybe a scalp, I'm actually thinking that maybe in this case, a holding a position and looking to find a very good entry and then holding it for that $400 target is probably a better thing for such a strong fundamental picture. That scalping, if you are skilled at it, it was very challenging with silver. Gold, it was a little bit easier. It moves a little bit slower. But silver is you're going to hear about when you see silver at 100, 200, $500 an ounce, wherever it is, having some type of position, whether you use ETFs or options or mining stocks, there's a way you can take part in this and be part of the silver rush that's going forth. Okay. So again, my name is Dr. Greg McLeod. I want to I'm going to open up for if there are any questions that we have either from YouTube or from our VIP audience here. And if I don't see any messages in the chat box, we'll go ahead and we'll sign off. But Jay, I just want to tell you, Jay, that our student John just moved to Las Vegas, John Mason, and John Mason is a great trader. He took a trade to Milan, and he actually placed a trade. I placed a trade at 30,000 feet. I'm like going, really? He said, yeah, I placed a trade. And I thought he was talking about time frames. He's no, I'm on an airplane. I placed a trade. I made money. So he was scalping in the cloud. So pip and fly, which is a really cool thing. And a big shout out to Kelly Hill. Kelly is a student from Australia, and she just passed stage 2. She doubled a $10,000 account, and she doubled it, which is fantastic. And looking for her post, but anyway, big congratulations to her. She's been working really hard. So we'll see her in stage 3 live trading. So that's going to be fantastic to see. So big shout out to Kelly. And with that said, thank you for joining me for Coffee with Greg. The Pip and Run version. If you found this helpful, give it a thumbs up and a like, and we'll talk to you later. Peace and pips. Yes, Jay, Chef Kenny's. Definitely. In fact, it'll be lunchtime in a couple of hours. Give me a call. All right, bye.